What if I told you that one of the fastest growing cities in Australia is expected to see property prices jump by 14% this year? And it's not Sydney or Melbourne? Or that Miami's real estate market is still on fire, even though insurance costs there have spiked over 40% in the last 12 months? And here's a wild one. Manchester's rental yields are nearly double those in London right now. I was chatting last week with Justin Dross, a strategist I trust out of Texas, and he said, "People keep asking me if it's too late. I tell them, it's too late to wait." In this video, we're breaking down 5 cities where your investment dollars can still work harder in 2025. We'll dive into capital growth potential, rental yields, and the hidden risks most investors aren't even thinking about. And by the end of this video, you'll know exactly where the smart money is headed and where you might want to make your move next. Part 1. Miami, Florida. Cash flow meets global demand. Miami is a city that never seems to cool off, literally and figuratively. Despite rising sea levels and insurance costs climbing 42% since 2023, investors are still pouring in. Why? Because Miami offers something few cities can: high rental yields paired with global prestige. Let's start with the basics. The median home price in Miami sits at around $630,000 as of late 2024. Not exactly cheap, but still within reach for high net worth investors looking for a foothold in a market with international appeal. Condo prices alone have risen 3.9% year over year, with areas like Edgewater and Brickell seeing even sharper climbs. And rental demand? It's through the roof. Nearly 70% of Miami residents rent, creating steady cash flow opportunities, especially for investors tapping into the short-term rental market. Average monthly rents hover around $2,700, with some luxury units commanding far more. We're talking 4 to 6% rental yields, even after factoring in those sky-high insurance premiums. I recently spoke with Carlos Mendez, a real estate consultant specializing in Miami's luxury sector. He told me, "The big story here isn't the risks, it's the demand. You've got New Yorkers relocating to avoid state income taxes, South Americans moving capital into stable U.S. real estate, and crypto entrepreneurs snapping up waterfront condos. Miami isn't slowing down, it's shifting gears." But it's not all smooth sailing. Miami faces rising insurance rates and flood risks that make some investors nervous. In fact, insurance premiums in parts of Miami-Dade County have jumped over 50% in just 2 years. Still, for those willing to do their homework, the returns can be exceptional. Take a look at this chart, Miami condo price trends 2020-2025. You'll notice that while prices have leveled off in some areas, the luxury sector remains robust. If cash flow and international tenant demand are your priorities, Miami deserves a close look in 2025. Part 2. Austin, Texas. The tech boom town that's still affordable. Austin is a city that many investors thought they missed out on, until now. After years of rapid price increases, the market has finally cooled slightly, offering what some experts call a rare second chance. Right now, the median home price in Austin is about $550,000, a far cry from the $1 million plus averages in coastal tech hubs like San Francisco. Prices are projected to dip 0.4% through late 2025, but many analysts predict 3 to 4% annual growth starting in 2026. What's driving this confidence? Austin's tech ecosystem. With giants like Tesla, Oracle, and Google expanding operations, and a population growth rate of 150 new residents per day, demand for housing continues to outpace supply. Vacancy rates are under 5%, and rental yields are typically 3 to 5%, depending on the neighborhood. I had a conversation last month with Justin Dross, who's been investing in Austin since 2014. He said, "What's happening now reminds me of when I first got in. People were hesitant. Prices seemed high, but 5 years later, those properties had doubled in value. Austin's not done yet, especially if you know where to look." Areas like Muller, East Austin, and Leander are particularly attractive, offering access to tech campuses and lifestyle amenities that draw young professionals. And check this out. Austin population growth versus housing supply 2022 to 2025. Even with 55,000 new housing units added since 2022, the market remains tight. For investors seeking long-term appreciation with a tech-driven economy, Austin is a smart play in 2025. Part 3. Brisbane, Queensland, Australia's rising star. Brisbane might not have the same name recognition as Sydney or Melbourne, but it's quickly becoming Australia's hottest market for capital growth and rental income. The median house price in Brisbane has climbed to $974,396, and forecasts suggest prices could rise by 5% to 14% in 2025. That's a staggering number when you consider the market has already surged 55.2% since 2020.
Why the optimism? Infrastructure and global events.
Brisbane will host the 2032 Olympics, and billions are being poured into city projects like the Cross River Rail and Brisbane Metro. These projects are expected to drive long-term growth, making the city a magnet for investors. Rental demand is equally impressive. With unit rents up 16.2% year-on-year, investors can expect yields of 4 to 6%, far higher than in Sydney's overcooked market. I recently attended a webinar with Hannah Porter, a Brisbane-based property strategist, who said, "Everyone's been so focused on Sydney and Melbourne, they're missing the big picture. Brisbane is where the growth is happening, especially in suburbs like Redlands and Wynnum West." Take a look at this map. Brisbane Top Suburb Growth 2025 Forecast.
These areas offer affordable entry points and strong rental demand, particularly from interstate migrants looking for better value.
For international investors, Brisbane combines growth potential with solid rental returns, making it a standout city in 2025. Part 4. Manchester, United Kingdom, the UK's high-yield alternative. If you're priced out of London, or simply looking for better returns, Manchester is worth a serious look. The median property price is just $233,000, which is roughly one-third of London's $705,000. But it's not just about affordability, it's about returns. Rental yields in central Manchester are 6 to 7%, thanks to a thriving population of students, young professionals, and digital nomads. The city is home to major employers in tech, media, and finance, and the ongoing HS2 rail project will further enhance connectivity to London. I recently spoke with James Bennett, an investor who pivoted from London to Manchester 3 years ago. He told me, "I was getting 3% yields in London, maybe 4% if I got lucky. In Manchester, I'm consistently hitting 6%, and I bought in at half the price. It's a no-brainer." But it's not without challenges. First-time buyers are struggling to save deposits, which could limit owner-occupier demand. That said, for international investors, the rental market remains strong. Take a look at this comparison, Manchester versus London rental yields 2025. Manchester's yield advantage is clear, and as regeneration projects accelerate, there's still room for capital growth. Part 5. Calgary, Alberta. Canada's hidden gem, Calgary, is often overlooked in favor of Toronto or Vancouver, but that's exactly why savvy investors are paying attention. The median home price here is $577,900, and experts forecast 5% growth in 2025. That's attractive compared to Toronto's $1.08 million median and declining condo sales.
Calgary's rental yields hover around 4 to 5%, driven by strong migration from provinces like Ontario and British Columbia, where affordability is becoming an issue.
What's fueling the growth? The energy sector recovery, rising tech industry presence, and lower mortgage rates, with 3.87% for a 5-year fixed being common. Shazi Goli, a real estate advisor based in Calgary, recently tweeted, "Toronto's condo market is slowing, but Calgary's just getting started. It's like investing in Toronto 20 years ago without the price tag." Check out this comparison. Calgary versus Toronto home prices 2025. Calgary offers better value and room for appreciation, particularly in areas like Beltline and Eau Claire, which are attracting young professionals and downsizing retirees. For Canadian and international investors, Calgary represents affordability, stable returns, and growth potential, without the overheated competition seen in Canada's larger cities. Which city is your best move in 2025? All right, let's recap. We've just explored 5 of the most talked-about cities for real estate investment in 2025, and each one offers a different kind of opportunity depending on your strategy. If you're after cash flow and rental income, Miami still delivers, despite rising insurance costs. Investors are targeting neighborhoods like Edgewater and Brickell, and the rental yields of 4 to 6% are hard to ignore. If long-term capital growth is your game, Austin is still one of the most undervalued tech hubs in the U.S. Prices are holding at around $550,000, but with 150 people moving there daily, demand is only going one way. Take a look at this population versus housing supply chart again if you're wondering about the pressure on inventory. Austin population growth versus housing supply 2022 to 2025. Over in Australia, Brisbane is shaping up as a dual-play market, capital growth and solid yields. With prices forecasted to rise by up to 14% this year and the 2032 Olympics on the horizon, it's a strategic time to get in. Check out this map of Brisbane's top growth suburbs before you make your move. Brisbane Top Suburb Growth 2025 Forecast. For high-yield rental returns, Manchester is outperforming expectations. 6-7% yields, paired with low entry prices, make it a strong contender for UK and international investors looking beyond London. And remember, HS2 is still on track, which could add even more value. And finally, Calgary, the hidden gem in Canada's property scene. Affordable, stable, and poised for growth as migration flows west. With 4 to 5% rental yields and a median price that's still under $600,000, it's offering real value in a market that's becoming harder to navigate elsewhere. Take a look at this comparison one more time. Calgary versus Toronto home prices 2025. So here's the thing. None of these cities are perfect. Every market has its risks. Flood zones, taxes, overheated suburbs, and you name it. But for savvy investors, 2025 isn't the year to sit on the sidelines. I was talking to Hannah Porter last month, and she said something that stuck with me. You make your money when you buy, not when you sell. And right now, there are still smart buys out there, but blink and you'll miss them. Be the first to act, not the last to watch. Now it's your move. Which of these 5 cities fits your investment goals? Are you leaning toward cash flow in Miami or capital appreciation in Brisbane? Drop a comment below. I'm genuinely curious where you see the best opportunity. And if you found this breakdown helpful, do me a favor. Hit that like button, subscribe to the channel, and turn on notifications. We've got deep dives coming soon on Austin, Manchester, and Brisbane, with insider insights and neighborhood-level data you won't get anywhere else. And trust me, you don't want to be the last to know. Because by then, the best deals are already gone.